ABC Bullion's 360 monthly review. My name is Crystal Thivios and I'm joined once again by our precious metals expert, Global General Manager at ABC Bullion, Nick Frappell.
Hey Crystal.
How are you going, Nick?
Very well, thank you.
It's the start of another month again.
It is.
Gold is obviously hitting its key support levels again.
Mm-hmm. Yeah.
Why is that happening?
It's another spike upwards in bond yields. Yields made a high just recently of about 177, really close to some crucial levels, 180 and perhaps even 190. The onward march of yields and the decline of bonds is just pretty much unstoppable at the moment, and that's one of the biggest single explainers of the US dollar gold price. So that's why gold's really been hugely on the defensive. Really interesting thing is that you mentioned that there is this key support, and we're back to it again, and we're really testing it quite heavily. Is one of the charts I'm going to show this time is just a really simple one, but just showing how gold's retracing on the March, August on, which we often do talk about, and also the move from December 2015 up to the August 2020 high. There's a really interesting confluence of Fibonacci retracements there that are about $8 apart. So this level should, if it doesn't hold, it doesn't hold, but it's a really interesting level for gold to keep retesting.
Okay.
The other thing that people use less often, and I don't really use at all, but I thought it'd be kind of interesting to show, is a Fibonacci sort of time extension to sort of see whether the periodic lows and the cycle in the market kind of match a Fibonacci extension. They kind of do, and what's interesting is the latest one is really close to this recent low, and I'm just wondering if those three things all coming together, that's what's telling me this is a really important level.
Awesome.
So there's quite a lot to look at, and I'll try and hopefully put that in a fairly clear chart in this month's report.
Awesome.
So of course bonds are a really big issue. The dollar's a big issue. It's doing a lot. I know we'll talk about that in its own sort of area. But if you look at positioning, it's really interesting, how big an outflow there's been in gold in the last few months. I was just looking over the last month, but looking over the course of the year, I think we've seen like a 40+% decline in managed money longs.
Wow.
ETFs are down below 100 million ounces. So there's been a real sort of outflow from the investor sector. And I guess, they're seeing, despite a bit of volatility and some, interesting stuff with Archegos and so on, we're seeing good returns elsewhere. Seeing basically it's a bet on the US economy having a, really fantastic recovery. The flip side of that is, firstly, inflation. I don't think there's anybody who's not talking about inflation, which should be gold positive. And the third thing is really, has the Fed got things under control in terms of, can they manage the sort of monetary policy if they have to sort of step back from it as growth reemerges? Can they do that in a way that's smooth and doesn't really disrupt asset markets too horribly?
Okay.
I'd say one last thing about gold. There might be some real volatility around the corner, metaphorically, but I think what you're looking at is something where after that volatility is over, you should see that gold is still fair valued, and that also it will have played its role as a kind of risk diversifier.
Awesome.
Yeah, hopefully.
As you were saying before, it seems like the dollar is obviously very important. What has past positioning showed us?
Well, with the dollar index, what you've seen is a cycle of people building up net shorts, over years, and then buying back. So, the net position then turns positive.
Yeah.
And you've seen like 4 or 5 of those, perhaps, that I can point to fairly easily. And what happens is when you get to that sort of fairly distinct net short, the position turns around and you see a really good a rally in the dollar. And obviously, the positioning thing is just really a timing thing, because obviously the market psychology is saying, well, people are pro the dollar, and the net positioning thing is just, it's not driving that, it's just a sort of a little symptom of that. We saw the dollar index going pretty short on a multi-year basis, fairly recently in the last few months. Now, of course, that short has now turned net positive, And we've seen the really, pretty good dollar rally, which might have been unexpected. Beginning of the year, I think people were very bearish of the dollar.
Yeah.
A really, really critical thing, which I think has been the, at the forefront this month, is we had the expected test of the trend line that the DXY broke down through, but now it's actually going through that level. And is it just going to slightly break through the trend line and say, okay, I've done enough, and weaken again? Or is it really going to advance? And can't say. I mean, I'll try and put some dollar targets on in the report. But one thing that I would say, basis this past positioning issue that you raised, is that those rallies go on for longer than you expect. So if the past is a guide to the future in that sense, then yeah, the dollar index rally is not done. And that's another thing which obviously is really key for gold.
Awesome. And how is silver looking?
Silver is looking relatively better than gold technically.
Yep.
Obviously it has, struggled, it's weakened lately. The one thing I'd say over the last sort of month or so, if I look at the big picture over the year, is that we've had, I think, 40 million ounces of decline in terms of managed money longs exiting. We've had 40 million ounces roughly of fresh shorts, managed money shorts selling silver in terms of betting on lower prices.
Yeah.
We've had about 40 million ounces going out. It's really easy to remember, 40 million ounces of ETF selling. So about 120 million overall, 3,730 tons of outflow. So that kind of tells you what people are thinking of silver.
Yeah.
At that sort of, big macro level. Kind of think, when it's coming off like this, it's a good time to buy, relatively speaking, because, you're not chasing the highs.
Yeah.
So, it's above the weekly cloud. That tells me it's positive. Some of those bigger targets may have gone away, but again, I'm going to put that in the monthly report so we can have a look at that really large picture of how things are set for silver and the likely outcomes for silver.
Awesome. It's great to see that it could be a potential buying opportunity.
Yeah.
Lastly, I just want to talk about the dollar index a little bit more, maybe with some reference to the Australian dollar.
Oh, yes. Yeah. I don't want to forget that. So dollar index, obviously we were just talking about, looks like there's a good chance of a bullish resolution. So you'd expect the Aussie to weaken a little bit. I still think that the trend action is positive. Support, initial support line 75. Still believe in that. We'll have a look at what sort of potential targets are like, but because of the really strong price action in the last couple of months, don't expect to see too many downside targets. More just kind of key support levels. Awesome. The one thing that, in terms of the Aussie and the sort of inflationary issues that we talked about earlier on, obviously the Australian economy is, very healthily underpinned by real assets. So I suspect that the Aussie should benefit from that. It's a question of then whether it's real assets are the driving thing, or whether that as the year unfolds, whether you see a risk-off attitude to risk.
Awesome.
So risk on or risk off. Risk on will definitely favour the Aussie. Hard asset exports will favour the Aussie. If there's any issues with those two, then you'll see, more of a threat to the Aussie dollar. Not actually expecting anything terribly bad, but obviously a strong dollar index implies a weaker Australian dollar.
Awesome. Thank you so much, Nick. And thank you once again for tuning in. For more from ABC Bullion 360, please subscribe to our YouTube channel or follow us on our socials. For Nick's monthly technical report, also head to abcbullion.com.au. Until next time, thank you.